Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now, we need to take a look at some stocks. They are on the move today. We're joined by Lisa Mateo. Lisa, what do you have?
All right, so we're starting with Goldman Sachs. Has been riding this wave of volatility. Its shares have been up as much as 2%. Stock traders posted their highest quarterly revenue haul on record. A beat on equities trading revenue for the first quarter, rose 27% from a year earlier, almost $4.2 billion for the first 3 months of the year. It also announced, and this was big, a share buyback program of up to $40 billion. But what it does, it really follows a record year for Goldman in 2024. It lifted its revenue in the division by almost 50%. And everybody's always focused on what the CEO says. Well, David Solomon said, yes, they're entering the second quarter with a different operating environment. But Goldman, he says, is confident in its ability to continue to support their clients.
Goldman Sachs, share buyback, $40 billion, 25.2% of market cap. $40 billion for Apple is 1.x%. Oof. It's just, Apple's teensweens compared to what we got going on at Goldman.
Oh my gosh.
Next,
well, since you mentioned Apple, I'm going to go there. Okay. Good. Its shares have been up as much as 5%. Thank you for that. Benefiting from the tariff news. So here's the background, right? It started Friday. You had the White House saying it was exempting some tech products from tariffs. Then on Sunday, President Trump came in and said it was temporary and that earlier exemptions are really just moving into a different tariff bucket. But it's not just Apple that's moving higher, because it still is. Companies like Dell, HP. Then you have the chip sector. You have NVIDIA, Advanced Micro Devices, Broadcom, Qualcomm. Even Apple suppliers in Asia, they're recovering, like Foxconn. You know, they manufacture the iPhones. They closed about 3% higher, too.
One more. What do you got? All
right. So Pfizer, we heard of obesity shots, right? Well, a lot of people, have those. But Pfizer was working on obesity pill.
That's what we're talking about.
And that's key. It was closely watched by investors. They were waiting for it, but now Pfizer's saying they're going to stop working on it.
Really?
It was linked to this potentially drug-related liver injury in one patient from a clinical trial. So that's the reason why it's such a blow. I mean, Pfizer, they were already behind in the competition, right? They made competing in the obesity market kind of key because they were trying to come back from this COVID comeback, So their shares have been lower, but who it is benefiting is their competition, like Novo Nordisk. Their ADR is up about 3%. And Eli Lilly, their shares have been up as much as 2%. So not too bad. Yeah. Last one I want to mention too quickly before we go is Intel. Its shares, the company's really been struggling, right? Like it lost market share to rivals in recent years, missed the shift to AI accelerators. Markets now dominated by NVIDIA. So it's spinning off non-central businesses and assets. For example, it's agreed to sell 51% of its stake in programmable chips unit Altera to Silver Lake Management. The deal should close in the second half of 2025. Intel continuing to hold that 49% stake in the business, but it values Altera at $8.75 billion. Intel back in 2015, they paid about $17 billion for the company. So you see the difference there.
Well, that's the important statistic that they never talk about.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.